Hi, everyone. Welcome to the new episode of the show called Behind the Success. In today's episode, we have Dheeraj with us, and we are going to talk about one of the prominent topic in our country as per today, cryptocurrency and blockchain. Thank you, Dheeraj, for accepting the invite, and I'm really looking forward for today's episode.
Gaurav, I'm so happy to be here. Thank you for inviting me.
Thank you. So let's get to the topic. And I would say before I get into detail, my first question to you is that if someone is completely new to cryptocurrency or to the world of cryptocurrency and blockchain, what would you like them to know?
I would like them to know that, hey, this cryptocurrency and blockchain or Web3, as we call it, is a whole new world where a person has complete control about for everything they do, right? Like they have ownership to their privacy, they have ownership to their money, they have ownership to their data. That means no central companies or governments can control what you do, can control what you access, can control what you spend or earn on. So it's basically a new internet which is extremely decentralized, and the power from big companies is gone back to you.
Right, lovely. And I think this is one important aspect to also know, because I believe how banks or how central agencies do manipulate by printing notes, or let's say by controlling supply and demand, and that's how they control the pricing. So coming to it, I believe you have been working. You have been investing in cryptocurrency for a long period of time, and I've been seeing a lot of articles and work around it. So would like to know that how long it has been for you.
So it's been like an active and passive journey. But like you can say I started investing since 2016, but those investments were like a lot, like they were dumb. Okay, so like I made a lot of money, and I lost a lot of it as well, just because I didn't understand basics of money and economics and what these systems stood for. But like that's about it, right? Like it started in 2016. There was a big crash in 17, 18. So I was like, I was very disheartened that, like, shit, what happened? Like I lost 95% of whatever I had made, and I had made way more than I thought I could earn in my lifetime that time. So that was quite awesome, and for a college kid, that was brilliant, right? Like barely you make any money in India, and then like you're making 100x, 200x or whatever of your initial this thing, and winning is amazing. But I took it very seriously in around 2019, 2020-ish time, because that time I read a lot of literature about money, about economics, about the financial systems, about cryptocurrency from earlier in 2017, or even before that, like even 2013, 14, 2013, 14, it was just medium of exchange, right? Like send money to people, buy, take money from people. But investing came in 2016, where I understood a bit, right? Like, hey, what are these new projects, what are these new coins, what are these ICOs, initial coin offerings, that they are basically like IPOs but unrestricted, right? Like you can invest in any company you want, uh, and put any amount you want, but with IPOs there are certain regulations, rules, and you can invest a certain amount, or it's like a lottery system, like only few get selected. But in ICOs it's like, very open and very decentralized. So I found exciting ideas, like they promised the world but they didn't deliver, so lost a lot of money. Then came back in 2019, read a lot of literature and formed a philosophy, understood why blockchain crypto exists, to like make better decisions in investing.
Thank you for sharing your inspiration and why I would say it happened.
Mm.
And I also believe that it happened to me accidentally this year itself, and I realized that I was making a lot of money, and I also lost money very quickly because there has been kind of a bearish market happened this year around May and June. And one thing which really made me question, and I was just thinking that about my decisions and why I was doing what I was doing. One thing which I realized that it happened because I had kind of a fear of missing out, because a lot of my
Mm.
friends in my circle were investing, and I did it without knowing the crux, without knowing what I was getting into. And this is something which I really understood, that it's a very ground rule of any kind of investment, be it real estate, be it stock market, be it being an angel investor, that you need to know the game before you're getting into it. So
Yeah.
I would like to create this episode more of an opportunity that how our listeners can understand more details, and how even I, being an investor, can understand the crux. So coming to the technical questions, my first question to you here is that how do you explain that how exactly the cryptocurrency works, and what is the blockchain, and how every token in general
Cool.
works around it?
Cool. So what I'll do is I'll take Bitcoin as a base to
Sure.
talk about. So I will replace your word crypto with Bitcoin. I'll explain how Bitcoin works, because if you understand Bitcoin is fundamentals, right? Like if you understand Bitcoin, then it's easier for you to understand everything else. So Bitcoin is basically a peer-to-peer digital uh, decentralized currency which exists online, and you can transact with each other, me and Gaurav or me and Barack Obama, without needing a central bank or a central authority in place, right? Like I don't need to use Paytm, and Paytm is connected with my HDFC and Gaurav's ICIC when he's receiving it, and then his Google Pay to receive money, right? Like there are four people coming in middle, and also a like a UPI system coming in middle. So there are 5 layers of failure, which gets demolished in a peer-to-peer system, because you are using a something called blockchain. What is blockchain? Blockchain is a public ledger. What is a public ledger? So public ledger is basically, let's say, an accounting book which keeps all the tracks of all the transactions that's happening in the world, and is also open for everyone to see. So if I'll give a better example so people understand. Now let's say uh, Gaurav and I are in a classroom, okay, and I'm giving Gaurav 10 rupees, okay, and there are people, there are students, or there are people sitting in the classroom, and I give Gaurav uh, 10 rupees, but now, like, Gaurav knows that I've given him, and I know. But what we do is I shout, "Hey guys, I'm giving Gaurav 10 rupees," and Gaurav shouts, "Hey, I'm getting 10 rupees from Dheeraj." Okay, that's cool. And then people sitting there, they take their pen, they write it in their books, saying like, "Hey, Gaurav Dheeraj gave Gaurav 10 rupees. Dheeraj gave," and all of these 50 other people, they write it. Okay. So we come to like the majority of people agree that Dheeraj gave Gaurav 10 rupees, and then that is noted, right? And then Gaurav sends it to someone else, Avi. So Gaurav shouts like, "Hey, I've given 200 rupees to Avi," and so all of us write it down again. And but this exact thing is happening. So what this happens is there are 50 people whom Gaurav and I don't know, right? In the classroom, and they are being incentivized to write these transactions and be fair, right? So 51% of the people, if they agree that I have sent money to Gaurav, then it gets written in a big book, right? I mean, I can just say, like, I sent Gaurav money, and he can just say I didn't receive it, but everyone saw it happening, right? So like it's noted, right, in the classroom. So that is the example of what a blockchain works, but you take this classroom into the internet, and me sending money to Gaurav, and there's someone called miners, maybe we won't get into, maybe we will, who are these bookkeepers who check all the transactions which are happening on the blockchain. So that is a basic idea, that it's a open public ledger blockchain bookkeeping system.
All right. Thank you for sharing that. And I would say, I believe we can talk about jargons, because if people are actually genuinely interested to invest, I am sure either they would have a little understanding or they would like to know. So I'm just making things easier for you there. Coming to it, I would also like to know that how pricing works, because there are little jargons I'm also throwing here. Little supply and demand, pump and dump, right? And so how do you see that, how one can predict the pricing in one aspect, or how they can gauge how the market is going to react or respond?
You can't. There is, if someone says you can predict, then like either they are geniuses and they should be probably able to own all the bitcoins in the world, or they are fooling you, right? Like, so there is no way you can predict what is going to happen. If that would possible, I would probably be the richest person in the world, right? Like, or someone else, by just trading crypto. It's not possible. This is my personal opinion, okay? Like, there might be people who will tell you, look at these lines, look at that. No, man. Like, if tomorrow there comes a news that China is banning Bitcoin, everything, like, your lines disappear. Okay, so there is no way that you can predict, right? Like, if tomorrow US says, like, we are going to make Bitcoin a legal tender, price goes up. So it's very psychological, it's very emotional, so you can't predict people's how they behave.
Right. Thank you. Now there also, because we talked about Bitcoin, and I would say
Gaurav, yeah, before we get into that, I mean, that's a simple answer, but like, the price of Bitcoin or any cryptocurrency is 100% dependent on supply and demand. If that's simple, right? Like, if there is more demand than there is supply, then the price goes up. If there is more supply than there is demand, then the price goes down. So that's basically how the price movement happened, right? Like Gaurav mentioned that, like, all of his friends were buying. He didn't want to miss out. So that time prices were going up, I'm assuming, right?
Yes.
Yeah. So that means the supply was lesser and the demand was more. That means the prices were going up. But, like, maybe someone sold, and there was a small drop, and then you panic, like, holy shit, what is happening, right? Like, someone is selling, I think it's going to down. There is more people selling, that means price goes down. So these are the basic economic factors which come into picture.
Right. So we talked about Bitcoin, and I'm assuming there's also a term called altcoin, and there are a lot of other tokens which comes under altcoin. So how do you explain, let's say, the crux where I'm trying to come is that how one can identify investment worthy coins, or let's say whenever they're making an investment, what should be, let's say, 2 or 3 objectives they should look out in before they invest?
So my first suggestion is, don't invest in altcoins, mostly because you are going to pick the wrong ones. That's, like, if I have to be very blunt, this is what I suggest. What I really suggest is, again, no financial advice. I'm not a financial advisor. This is just something I would do. Doesn't mean you have to do, and you have to put your hard earned money in it. Bitcoin is the strongest, Ethereum is the strongest coins which have been existing for a very long time. And they have something called the Lindy effect. That means the more a coin survives through all these cycles, the more chances of them succeeding and surviving. So what I would do is, I would go buy Bitcoin and Ethereum every month or every week in smaller amounts, instead of putting a large amount of money into anything. right? Like I will not even buy Bitcoin in large amount. I will put whatever you can afford to lose is what I will put in Bitcoin and Ethereum, little by little by little by little. So what happens? You're taking risk adjusted bets. Okay, what does that mean? Is you might not make 100x, you'll probably make 10x instead of that altcoin which probably promises 100x, but you will also not lose 100x. So that's where we are going down, right? Like, so you won't lose a lot of money if the market goes down, and you will, like, so it's a bit stable. So that's what I would suggest. But hey, let's say you are a nerd, you spent 1 year 6 months, gave like all your hours learning about crypto, learning about Bitcoin, learning about Ethereum, what are these philosophies, why people are investing. Then, and if you want to play around with, let's say, 5% 10% of your portfolio into altcoins, because you think, like, these projects will go up. The number one thing is something called network effects. I can go on about network effects for 30 minutes, but I will recommend that you go read these articles and videos on network effects. It basically means that if a new person, if let's say I'm a social media, if a new person is added to social media, like if there are 2 people or 3 people, then uh, all the cross connection, the network doesn't increase by n+1. That means the current person +1. These is not a new connection, but uh, I don't remember the term, but like the multiplication of all the permutation and combination of the people inside that network. So if there is a network effect in any of the coin, which you see, that means if any new person will add 10x the value of the entire network currently, then those are the coins you need to invest in. Again, this should have been my 4th recommendation, but first one would be, look at the team, look who these guys are they legit, are they on LinkedIn? If they are anonymous, completely avoid, right? Even though Bitcoin suggests, like, the Bitcoin is a pseudo anonymous person, but like, again, risk adjusted bets we need to take. Avoid anonymous people, see what's their track record. If they it's yeah, and like if they're just building, see how long the project has existed. If they have just started in 2020 2021, completely avoid, no matter what it is. Again, but it's subjective, right? Because people come in hype markets to build products, but when there is a bear market is when, like, the market crashes, 99% of them disappear. So you don't want to you don't want to lose 99% of your money. So avoid teams which are like new and they have no experience in crypto, because crypto is not easy to solve, right? If someone is coming from traditional finance or traditional background to solve a crypto problem, it's not easy, because you need a crypto mindset to solve these problems. uh, Thirdly, look at the problem they're trying to solve. If it's a very big problem, you think you can solve, and if it can't be solved in a centralized way, right? Like in our current system, if the problem can't be solved, then probably adding blockchain to it is also not going to solve, uh, most likely than not. So that, and then do you personally have that problem in crypto that the person is trying to solve? So these are all the things I will, like, take into account. But hey, the better idea is to dollar cost average into Bitcoin and Ethereum. So yeah, this is too much work and too high chances of failure.
Thank you. Since you talked about other parameters, and I would say there's one coin apart from, I mean, in terms of altcoin, I would like to talk about, which is AVAX. And the reason why I'm bringing this up, because I see there are some coins which actually have high bars when it comes to a bullish market. And I was reading more about it. And one thing which I realized, that this coin is trying to solve the problem of the efficiency. I mean, in terms of how they accept the credit card payments, and how they're trying to work on saving the time when it comes to transaction. So how do you understand? I mean, what is your take about investing in such coins?
So you're talking about Avalanche, right?
Yeah.
That's yeah. The thing is, I have not done enough research to comment about it, so I don't know. Yeah, so I will not comment on the things I don't know.
All right, no worries.
Yeah.
Now coming to the another aspect, and I would like to talk about two more jargons here, which is swaps and smart chain contracts. And I'm bringing this because talking about, let's say, Pancake having a swap, right? So how do you see the impact happens on tokens because they have swap, and how do you see the overall impact?
So we before we get into the swaps and what are they and what are these tokens, we'll run with the basics, right? So what are these swaps? Swaps is not the term we use. We use the term called decentralized exchange or a DEX. What is that? What is a decentralized exchange? Is where you don't need KYC, you don't need email ID, you don't need any kind of verification or to use an exchange. You just need a wallet address on that blockchain, and you need some coins in your wallet to use an exchange. This is very different from a WazirX, from a Binance, or even a B21, where you have to verify, you have to send money, you have to exchange in a centralized manner. Because in crypto, we are all about decentralization, right? That means we do not trust centralized entities to make good decisions for users, or if they fail, our money is lost. So I'm not saying all these people are bad or anything. I'm just saying this is the risk you take by keeping your money with a bank or a centralized exchange, that they could close, they could shut, they could run away with your money. And I'm not just saying this, it has or they can get hacked. This happens with banks a lot. If you are in India, so many of the banks have closed down, and people are standing in line to remove 5,000 rupees from their account. Or the bank literally gives a notification saying like, hey, if there is a death in your family or if there is a marriage, only then you can remove. This has happened. This is ridiculous. Or exchanges get hacked and millions of dollars are lost, which is that's not a good scenario. So we go to decentralized exchanges. That means you just need a wallet which you have to create, and you can use it to convert from US dollar to Ethereum, or Ethereum to basic attention token BAT, or any kind of permutation combination. That is what you can do. So these are these DEXs. So what they do is they actually give power back to people to control their money and spend it or exchange it however they want. So this is the basic concept of a decentralized exchange. So let's come to your questions. If you can ask them again, that would be great.
Sure. I was just trying to know that how do you see swaps and smart chain contracts in terms of a different impact happening on any token? For example, Pancake has a swap, and let's say any other altcoin not having a swap. So how do you see the impact in terms of prices, in terms of how people can benefit out of it?
Yeah. So see, most of these tokens which have which most of these DEXs or swaps, as you mentioned, have tokens, but they're generally governance tokens, right? That means they accrue fees of whatever is being exchanged, like sushi swap, or they're just governance for uni. That means you can make changes or vote in that ecosystem. But for Pancake Swap, it's I am not sure if they have governance. but you can use these cake tokens to earn some rewards and stake it to get new coins. So it's interesting, that's all, right? Like, I mean, I'm not really sure how much it affects the prices, because like in bear market everything really actually goes down. So in and that's the thing, right? Like, you cannot actually tell, because in bull market everything goes up, everything. So like, are you smart, or is just bull market? No one knows, right? Like, so that's it's a difficult question to tackle and answer. And I don't know how it affects the price, because it's price is, again, right, supply and demand. If those guys on their decks, you make a good use case of that particular coin, that means more people will buy it, right? Like, if they're saying like, hey, if you hold these tokens and we'll give you Tesla, then hopefully, like, probably the price will go up. But with uni, that's not the case, right? Like, it's just for governance and voting. So why are people still buying it? Why are they people? I mean, it really depends, right? Like, it's uh the thing is, what you need to understand, the protocols, whoever is building and whoever, what they're doing is they don't control the prices. They cannot control the prices. If they did, then it will probably be a very centralized system, and then you probably shouldn't invest in it, because then they'll probably dump on you, right? So it's really market sentiments is what defines these prices. And if there is like a lot of utility to token prices, then probably it will go up. If there's burn mechanism, if there is utility spend, how many people are using it for actual things, then maybe, right? Like, but there's no easy answer to that.
Okay, so I'll come to the market segment, market sentiments, and I have two questions for that. But before that, since you're talking about swap, I would like to talk about a meme coin which recently picked up the boom, and it's
Yeah.
Shiba Inu. And
Yeah.
I read the news somewhere that there is a smart contract. I mean, they already have a swap now, and they're coming with a smart contract called Shiba Riam very soon. So how do you see something start from meme, and do you feel that people who are investing now, and they should also start investing in coins like Shiba, along with definitely your recommendation, which is Bitcoin and Ethereum?
So see, this is my opinion on meme coins. They are funny, they are interesting. It brings more people to ecosystem, but like, I wouldn't recommend investing more than 5 to 7% of your total investment amount into this. If you want to have fun, you want to play around, sure, try it out, right? And Shiba Inu didn't start as a meme coin. They actually were like designed by a bunch of marketeers, coders, to go viral. So it was like a lot of big brains went into it. And if I read their tokenomics earlier, before they came out with the version 2, and they were very nice. Like, it was a pretty nicely designed coin. So like, all this meme coins are for marketing purposes. They don't, I mean, I don't know if they can give you consistent results over a period of time, because as an investor, that's what you want, right? Like, do you want just one day to be a good day, or next 15 years to uh, grow? So something like that. And they came up with the Shiba swap, or whatever it was. I read the audits, they were pretty shitty, right? Like, people literally gave 0 on 10 for their how the system was built. So I mean, I again, right, I'm not an auditor, so I don't know much. But it's very risky for you to try out something new, because there are so many hacks happening in crypto, because even with bigger protocols, because it's a new technology, right? Like, people always trying to hack, and get money out of it. So if you are risking into a new chain, if you're risking into a new swap, you have to be very careful and just like put money you can afford to lose, because it's the chances of you losing your money are way higher than you making more money. So but I wouldn't stop you from experimenting, because experimenting is how you learn things. So if you want to experiment, if you want to play around with some amount which you can completely afford to lose, do it, right? Like not just for this, but any kind of um, um, blockchains, new tokens, new swaps, or whatever it intrigues you.
Thank you. So now let's talk about sentiments, and I would say the reason this plays a bigger role, and we have seen it happening with Elon Musk tweeting and how the bigger impact it can create. So my first question here is that we talk about a degree of decentralization with coins, and what I would like to know is, just by taking an example of HBAR, and as per my understanding, that there are a lot of big giants, technology giants, being on the board of directors with them, be it Google, Microsoft, and how do you see that? What is the future of such coins? Because I believe uh, the kind of power and the kind of authority they hold in the global world, how do you see they can create a bigger impact on coins like HBAR? Or in general, what do you see that the degree of decentralization, and what is their future?
So again, I have not read enough on HBAR, so it would be not good of me to comment on it. But from what I understand, not HBAR, but if you have board of directors in a crypto company, it's not decentralized. I'm sorry, right? Like that's not how decentralizations look. If you have influence over like somebody or like some organization, that doesn't sound decentralized to me. So it's not, I don't know about HBAR, but I'm talking in general sense, right? Like if you have these, I mean, yeah, it doesn't sound very decentralized. And you need to remember, these web 2 companies, Google, Facebook, uh, Instagram, whatever, right? What their business model is to sell your data, right? So they harvest whatever you do, they collect it and they sell it, and you get 0 rupees or $0 out of it. Will these people have your best interest in mind is also questionable. In Web3, I'll give you an example of Brave browser, which is literally uses uh, Chrome browsers, like Chromium OS, and maybe it's not that, but something which Chrome allows you to create new browsers. They use it. They block all the ads which steal your information, privacy, and whatnot. And they give you an opt-in that like, hey, do you want to receive advertisements? If you say yes, then you get 6-7 advertisements a day, and if you watch them, you get paid. They give a share of their revenue back to people, right? So this is how Web3 is built, that giving back power to the people. And if it is these mega organization, mega corporates, um, or like even governments, you can't tell if you have the best interest in mind or not.
Right. And there has been news about a lot of countries accepting crypto as legal tender, and there are also countries who are trying to ban or centralize it, or I would say, trying to aggregate it. What is your take about in India? Because I heard rumors that they are trying to bring a bill, and they want to get a control, because at the end they are bringing their uh, own kind of digital currency. I wouldn't say a coin, but then a digital currency. So what is your understanding about that sentiment in India?
So see, the thing is, I don't like to speculate. So the thing is, I will probably wait for the bill. Then I'll give. So, okay, cool. So I don't like to speculate on news, because what happens is these news are generally, there is no reliance on them. That means you don't know if it's a true news, where they have got their sources or whatnot, because Indian media has has no expertise to cover cryptocurrency. So they put whatever news sells. Okay, like if they write crypto and write something dangerous, they get more views, they get more reads. So media has been saying so much crap about crypto for, and like, it's going to be banned every 2 months, every month since 2017. Okay, so can we rely? No, not really. Government is smart enough, because, you know see, the government does is our government is not reactionary in politics, in what do you say, in suggesting new laws and regulations. When you look into the macro, we always take time, we always see what others are doing, we take best case practices from everyone, and then make suggestions and implement things. So, like, in most cases, uh, uh, for things like these, they literally have like panel of expertise and whatnot to discuss and see what is happening, and they take references from others country. So if you think India will be first mover to go and ban cryptocurrency, when, like, US and like all these bigger countries haven't done it, I don't think so. I don't think so. But um, there's a flip side to it. India could be the first mover to realize, saying that, like, hey, crypto is very good for a economy, because there's a huge wealth transfer happening from the west to east if we allow startups to be built in India, crypto startups, because they get huge investments, and it will be a huge employment sector, and we will lead the technology wave in crypto, because we already have so many developers and people working in crypto from India for all these bigger companies abroad. It could be a game changer, because in the stock market of 2000, around that boom, there was a huge tech boom, but India just got outsourced. Like, all the stupid jobs is what we got from US. Here we have the opportunity to create our own unicorns, our own employment benefits, employment, and massive amount of money from the world. So would India want to bring in revenue for our country? Sounds amazing, right? CBDC, all that, it's not that easy. It's not an easy answer, like, hey, we'll ban you or whatever, right? Like, it's not like, anyway, right? So I will wait for the bill to come exactly in the parliament, and see what they discuss, and then comment on it. From what I understand, Nirmala Sitharaman, Anurag Thakur, they have not said they are going to ban. They're like, hey, this is probably important for growth of our economy. Blockchain technology is what they said. They've not said currencies will be legal or whatever, which doesn't make sense. They don't have to be, because we have a legal tender. But the space, they are bullish on the space, they're bullish on the entrepreneurs and the technology. So that's where I am at. Like, I can't comment on things which are not even right. Like, it's like playing gossip, which is not
Right,
healthy.
right.
Yeah.
Definitely, I understand that. Before we go to the second segment, a last quick suggestion, and it's a question from another perspective. Let's say you have 1 lakh rupees at the moment. How, if you have to design a portfolio for yourself, what will be your choices?
Yeah. So see, personally, what I will do is I'll put 50% of my money in Ethereum. I will put 30% of my money in Bitcoin. And I'll put 20% of money in something called the DeFi index. That means there is a index of coins called decentralized finance blue chips, Uniswap, SushiSwap, MakerDAO, whatnot. So I will buy this will be my portfolio, majority Bitcoin, Ethereum, and a index of all the DeFi blue chips. But this is what I would do, because I like Ethereum, so I have some kind of bias. But
Right.
I don't want you to be biased like me. What I will do is I'll put for someone new 40% in Bitcoin, 40% in Ethereum, 10% in any kind of index. I'll suggest DeFi index, and 10% you can play around with whatever you want. So that's where I am at. Or you know what? I would probably reduce 5% from either Bitcoin, Ethereum, your choice. Put 15% on DeFi index, and then 10% to play around with whatever you want. So
All right.
yeah.
Thank you for suggesting, and I think it has been a very interesting conversation to know uh, a little detail and how exactly things really work. And I would say, talking about the basics, let's go to the second segment called Spotlight. And
Yeah,
in
so
this, both,
before
yeah,
that, sorry to cut you off, but nothing I say is financial advice though. I'm not a financial advisor. I have no clue what I'm doing. I just I'm just assuming this is a good way to do things due to statistics, but it's your hard-earned money. You have to think where your money goes 100 times. It's not easy. It's not easy to lose money, right? Because you have to take care of yourself, your family, if something happens, right? So you have to be very careful of your money and not listen to people on internet to say go and buy
right.
whatever you want.
I would in fact second that, and I would say it is very true about any kind of investment that you just gauge the information, statistics, and then you listen to your gut when you're making the decision. That is the extremely important, and you need to be more rational than being emotional. So don't get into a FOMO or things like that, and don't follow the market speculations. It's more important that you do proper research before you're getting into the game. And I would say it becomes, you need to be extra aware when it comes to cryptocurrency, because the entire industry is so volatile. Things are changing every hour and every minute. So just keep that in mind, and thank you for adding that. Let's go to the second segment called Spotlight, where both you and I will be sharing a recommendation. From my side, today's recommendation is a book called Orange Revolution. This book is very interesting if you uh, are very keen to understand team dynamics, or how to do a basic learning and development around your team. And I'm sharing this from a leadership point of view. I read this book a couple of times, and I actually decoded this book to design a lot of different activities or different courses for people. So if you like that, you can go and check it out. uh, to you, Dheeraj.
Yeah. So I'll say something related to crypto. I will not give you a book. I can, or this thing, but I think you should go, guys, before putting any amount of money. You should go and listen to Andres Antonopoulos. I'll probably give you link to him, and he has these books called uh, Mastering Bitcoin, Mastering Ethereum, and something very simple. Before that, I think it is called Internet Magic, not Internet Money or something like that, about Bitcoin, which he wrote way earlier. And those are very good books to read to understand the philosophy, the advancement of all these technologies. He had this podcast called Speaking of Bitcoin. You can watch that, and on his YouTube there is a playlist which is called Introduction to Bitcoin or Introduction to Crypto. You should go and watch that and understand how he looks at this space. And I think that will keep you grounded and understand this is way beyond making money. It's about um it's about how you can have sovereignty of your money. That means you control and own your money, and no one else does. So that's my recommendation.
Thank you. And I think this is really interesting, and I'll ensure that we share the link in the podcast itself, so you guys can find very easily. Thank you once again, Dheeraj, for being part of it. And I made my own notes about what extra I need to do research about. And thank you for sharing the basics and how people can become more aware about their own investments. So thank you once again.
Yeah, thank you for having me, Gaurav.